We've been talking about it all morning, Jeff. It is, I mean, it's a tragedy what's happening over there right now. But we are looking at oil continues to spiral upwards. The question at the moment is, does it continue apace? Is there some off ramp you see here? How do you handicap this?
Well, clearly, the situation is deteriorated. And as long as there's uncertainty around a conclusion on this outcome, the risk is to the upside across all the commodity markets. That's not oil, but, coal, wheat, aluminum, copper, all very much exposed to what's going on. I think the one that's more worrisome is wheat. You got 20% of the world's wheat exports come out of Ukraine. So no, the situation was bad coming into this because you had very low inventories, very little spare capacity, and not a lot of responsive supply to the higher prices. You put that together with this disruption that is potentially the largest disruption we've ever seen in commodities, creates a lot of upside risk here.
So that's the upside risk. Is there any downside risk at all? I mean, when you sort of think through the various permutations of how this situation could unfold?
Well, in terms of thinking about, obviously the biggest downside risk here would be, a peaceful conclusion, which I think we all hope for. But as each day that this drags on, that becomes, more elusive. And obviously, whether if it was, actually, I like to take, what the betting markets are putting the probabilities on. They put a 10% probability that Biden and Putin speak, and they're putting somewhere around a 25% probability of a regime change. You put those two together, that's suggesting there's a 35% probability to a peaceful conclusion here. I don't want to make my own predictions on this beyond my capabilities, but it tells you that, even looking at these broader markets, that the probability of this thing dragging on increases. And I think, the longer it goes, the higher the probability that oil and commodity exports go to zero. Because when you think about the idea of a central bank asset freeze in the context of an energy carve-out, the two cannot coexist. They're incongruent. So I can't come up with a sustainable outcome where you have both simultaneously, which suggests that the risks are very much skewed to the downside on exports of commodities, which then skews the price risk to the upside.
So if you're Jay Powell, how much are you worrying about stagflation?
Well, when we think about the risk here really are, confined to Europe. Europe, is the one that's the most exposed here. They're the ones that import the most hydrocarbons. You look at the United States, it has, obviously more than enough gas. Gas prices are relatively low. You look at oil prices, even at $110 a barrel. Historically, we're not even close to being at the highest levels. In contrast, you look at European prices in euros per barrel, we're at all-time highs right now. So, what's really different about this crisis than ones that we've seen in the past is that it's Euro-centric as opposed to U.S.-centric. Think about all of these other energy crises we've experienced over time have really centered in the U.S. That's what really makes this one different is it's more of a European problem than it is a U.S. problem.